is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Welcome everyone to another episode of DeFi Decoded today. I'm Andrew Young and my co-host Alex is unfortunately away, but I'm joined with a very special guest, Kevin Zhang. He is the co-founder of PayTrie and DFX, both of which I think are some of the most exciting DeFi related projects in Canada and definitely in sort of the entire stablecoin space. Today, we're going to be talking about stablecoins, DeFi, and sort of get Kevin's general insights into how he sees the crypto movement today. So with that, welcome to the show, Kevin, and thanks for coming on.
Thanks for having me, Andrew.
So I guess my first question is, how would you sort of describe PayTrie and DFX? And obviously, their sort of complementary relationship between the two of them.
Yeah, absolutely. So I'll start off with PayTrie. It's a little simpler to sort of like digest. So PayTrie is a Canadian on-off ramp. So what that means is it allows Canadians to go from Canadian dollars in and out of cryptocurrencies. PayTrie is unique and different from other like exchanges in Canada, and such that we don't sell Bitcoin, we don't sell Ether, we don't sell any other cryptocurrencies besides stablecoins. So what that means is that we go from Canadian dollars to US dollar-based stablecoins like USDC, Tether, DAI, BUSD, and a few more. So the whole thesis of this is that we allow people to choose whatever exchange they want to use. Once they have a stablecoin, they can go off to any exchange globally, and they're not essentially pigeonholed to the liquidity in Canada, the capital in Canada, and the tokens available in Canada. So, excuse me, we like to enable Canadians to reach a broader market, have the tools that are available in multiple platforms and exchanges, and really just be able to access larger amounts of liquidity that are outside of the Canadian market. So that's what PayTrie is. Very simple on-off ramp, and it really breaks down, I guess, the ability to get crypto to its simplest form in a lot of ways. And then DFX is a DeFi protocol. It's sort of like Uniswap, but dedicated to foreign exchange. So what we do is that we've like created a new algorithm, a new bonding curve in such a way that it makes low volatility trades highly efficient. And we consider that foreign exchange to be fairly low volatility because the the variance between the prices don't change as much compared to like tokens that are in the ecosystem. So we've actually incorporated Chainlink oracles to provide an external forex price feed into our bonding curve that helps it set the price. And then it uses that price to create a highly efficient trade between one currency to another using stablecoins. So we're working with partners from around the world. PayTrie is one partner, the one in Canada. We have partners in Europe, Singapore, New Zealand, Turkey, and we're bringing on more partners every day. So yeah, that's PayTrie and DFX.
That's awesome. And just to kind of explain to our audience, so the way DFX works is essentially you have some, and correct me if I'm wrong, you have some sort of liquidity suppliers who are providing collateral in some form of token. What type of collateral would that be?
So our pools are made out of USDC and another foreign stablecoin. So this could be Canadian dollars, could be euro, Singapore dollars, like it could be any other currency that's represented as a stablecoin. So right now we have 6 pairs, all paired with USDC. And then we use USDC as the bridge between all the different currencies.
Got it. Okay, I see. So USDC is sort of like the reserve currency, and then users or investors can sort of stake USDC to mint these other stablecoins?
Actually, no. So all the stablecoins that we have on our protocol are fiat backed. So in Canada, it uses CAD-C issued by PayTrie. In Europe, it uses EURS, which is issued by Stasis. In Singapore, XSTD issued by Xpers. So we have different partners around the world that issue different types of stablecoins. And then our pools are pooled assets of like foreign stablecoins and USDC.
Got it. That makes a ton of sense. So I guess that kind of goes back to your example of Uniswap. You're kind of like the place to be in DeFi for trading FX and effectively.
Exactly. We'll have the deepest pools. We'll have the best prices. We'll beat Uniswap probably 80% of the time.
That's awesome. And that fills a really big role, obviously, in the traditional markets. FX is, I think, the largest sort of subset of trading in terms of notional value, along with derivatives. What kind of role do you see traditional FX playing in the DeFi space?
Yeah, it'll probably take a little bit more time for like the traditional big boys to get into the crypto space. We think that it'll likely come from the commercial and retail side first. The way that we sort of think of DFX is like a decentralized transfer wise, or WISE, so they call themselves these days. And excuse me, we essentially crowdsource funds from people all around the world and create a pool of assets for people to essentially do FX trades against. It's not that different from what banks do today, where they take in your deposits and they hold your deposits and then they do something to make money with. And if they have an FX department, they essentially use your money to facilitate FX trades. But what we're doing is that we're crowdsourcing it from people around the world. And then the people that provide this capital essentially get the fees that are generated from the swaps and give them back to them for providing the capital. And then we set the prices using our chain and Oracle and provide highly efficient FX trades for end users. And what that means is that right now we're charging 5 basis points. When you're looking at a retail size trade, usually you're talking about like 300 basis points or more, depending on like the types of currency. So you're looking at like a 10 times savings sometimes, or like more than 10 times, like 100 times actually.
I was on mute. That's great. And you guys have had tremendous success. I'm just looking at the DFX app right now, over $15 million of total value locked. And there's some pretty incredible sort of pools for people who are more sophisticated to actually kind of participate in DFX. I'm sort of seeing annualized returns of over 60%, all the way up to 110%. So just to give sort of the audience some understanding, if you supply the Canadian dollar stablecoin and the US dollar stablecoin, you earn a annualized yield of 66%, which seems pretty crazy because obviously traditionally with stablecoins or with a bank account, you only earn less than 1% nowadays. And then some certain currencies, like I think this is the New Zealand dollar, it's up to 112%. What sort of makes those rates of return for liquidity suppliers different across different stablecoins?
Yeah, so each pool is allocated a different amount of DFX tokens, and most of the APY you see here is based off of the token price because of the way that liquidity mining works. You're incentivized to put capital into these pools by the DFX protocol, which issues out DFX rewards as a liquidity mining reward. Each pool is actually allocated a different amount based on the historical annual volumes that these currencies trade at. And we give each currency a score of like 1 to 10. The top 10 currencies in the world will get a score of 10. The next 11 to 20 get a score of 9. The next 21 to 30 get a score of 8. And then we give these allocation points to determine how many DFX rewards that they get. And then based on how much liquidity is in the pool, then the DFX rewards get like divided up based on how much allocation you put into the pool. So mathematically, it's pretty simple, but at a high level, it's really depending on how much money is already in the pool. The more money there is, the lower the APY. The less money there is, and you add more into it, the more APY you get rewarded.
That's great. Yeah, that's a great explanation. Before we sort of move on beyond DFX, just because the platform is so interesting, do you want to talk a little bit about, I guess, the sort of DFX token and the role it plays within this kind of ecosystem of foreign exchange?
Yeah, so we actually use the DFX token as a governance token. What this means is that DFX holders can vote on different proposals that get submitted to the community. So previously, we had votes for the New Zealand dollar and the Turkish lira. Those passed with our token holders. We actually recently also passed like the allocation scheme that we just talked about, where different stablecoins and different currencies get different allocations. So that like distribution scheme actually came out of a proposal, and DFX token holders voted on it. We have a couple of proposals right now actually to seed DFX rewards into Polygon pool. So we're active not only on Ethereum mainnet, but also on Polygon. We have about another 5 million in liquidity in Polygon. We're seeing actually a lot more volume in terms of like velocity in terms of FX trades on the Polygon side, mainly because of the gas fees being so minimal compared to the Ethereum side. And right now we split our rewards 80-20 between Ethereum mainnet and Polygon, but we'll like I said before, the DFX token is a governance token. If the community wants to split it like 70-30, 50-50, whatever it is, that can be proposed in our community, and DFX holders can vote to shift liquidity mining rewards from, let's just say, Ethereum mainnet to Polygon or to any other chain in the future.
Yeah, I think that's something that the audience should really understand. DFX is a decentralized FX protocol, meaning that the DFX token essentially has governance control over the entire platform. And anyone with DFX tokens can essentially propose changes to the protocol, and then everyone else votes on these changes. And so it's kind of it's completely turning the FX model on its head, in the sense that it's truly community owned and community led, which is completely unique in the traditional world. That's great. And you did mention one thing that I thought was really interesting, was about sort of how there's more and more market demand on sort of layer 2 networks. I'm kind of curious to ask a little bit more about that. Beyond sort of Polygon, is there a lot of interest in sort of these other layer 2s like Optimism, Arbitrum, or even non-Ethereum networks like Solana and other sort of blockchains?
Yeah, there definitely is, and we're seeing that more on the PayTrie side, where people would like to get stablecoins on different layer 2s to avoid paying bridging fees from, let's just say, Ethereum to any other network. And I think we're seeing a lot more demand for it, mainly because every new layer 2 or like any new blockchain these days, they're throwing like hundreds of millions in rewards onto that chain, and people are essentially moving capital there to reap the rewards. Obviously, these layer 2s are doing it in such a way that they can build up their network, build up their users, bootstrap liquidity, and so forth. But it just means there's more demand, and the funds are shifting away from just Ethereum to all these other chains everywhere. Could be Avalanche, Polkadot, Celo, Solana, whatever it is. There is demand for it. We can't support them all on the PayTrie side, but we try to support as many as we can, and we do it in such a way that makes sense for our business. On the DFX side, and how we see layer 2s, is that we don't want to really fragment liquidity too much between all our pools, because what makes stablecoins like and what we do like special is that we have the most liquidity in a certain pool, so we can provide the best prices. The more we fragment the liquidity to different pools, the less we can sort of provide the best price into a certain trade. So as of right now, we have stuck with Polygon. Doesn't mean we won't be deploying to another chain, but we're seeing a lot of demand on that side, and our stablecoin issuers are comfortable sort of supporting that ecosystem as well. We also require our stablecoin issuers to sort of like in general support that ecosystem. And if if one stablecoin issuer is going to Solana and no one else is, it doesn't help the ecosystem. It doesn't help interoperability. So it limits what we can do. We're trying to sort of find a common layer 2 right now, so that all our stablecoins on the DFX protocol can be interchangeable for each other on the same layer 2. Otherwise, we're going to have like hopping issues between different layer 2s.
Yeah, that's a great point. There's obviously friction every time you want to go from one network to the other, and we're sort of seeing a proliferation of different networks, whether they're EVM compatible or not, sort of splitting up liquidity. One thing actually I did want to talk about, I guess there's two questions I have. The first is there's obviously a number of different sort of US dollar based stablecoins. First, I guess I want to get your comment on which of these US dollar based stablecoins are you guys kind of seeing the biggest kind of growth curve or acceleration towards, or is it sort of staying fragmented? And then my second question was between currencies, obviously US dollar based stablecoins have sort of been dominating from the start, but are you guys seeing kind of an uptick in demand for Euro stablecoins, CAD stablecoins, or sort of other currencies?
Yeah, so stick on to your first question. The US dollar stablecoin market pretty much is dominated by two players like Tether and USDC. And then I think you sort of have BUSD as like the close third, or like the distant third actually. And really the three main players, you have the Tether organization, you have Circle, and then you have Paxos, which issues BUSD. At some point, and like based on the use case, it really doesn't differ too much once it hits like a certain like AUM or TVL in terms of the stablecoin. If all of them have like, let's just say $1 billion available in the market and it's liquid, it really doesn't matter which one you use as long as like your customers are demanding for that stablecoin. They're fairly interchangeable these days, especially with like DeFi protocols like Curve, where you can swap them between each other. We have preferred USDC on DFX mainly because of their history, their large like TVL in terms of like amount of USDC circulating. I think it's about like 30 billion. And I guess their credibility and their pursuit of like regulation versus like Tether, which is a little more questionable. Obviously, you also have Paxos, which is in the same ballpark as like Circle generally, but like BUSD is still very entrenched with Binance and the Binance Smart Chain ecosystem, and that might pose a bit of an issue moving forward. But generally, we're seeing actually increased demand for USDC recently.
Awesome. And then, sorry, just on your other point, between US dollar and like CAD coin, Euro coin, what sort of trends are you seeing nowadays?
Yeah, we're definitely seeing more uptick in non-US dollar stable coins, mainly on, let's just say, the Polygon side, as people sort of realize what's happening. There are other currencies available. I think at this point, it's still very nascent. Like, not a lot of people know about it. Not enough people know what they can do with it. So it's still a lot about like education and market penetration and having people understand like, what the use cases are for these different currencies. I think the US currency obviously is the most important currency in the world. It is a global currency. But there are so many different use cases that open up once you have different types of currencies that previously were not available if you only had one single US dollar currency. So we think that FX is that sort of foundational component, and then people can build on top of that and offer different currencies, different use cases on some of these stable coins.
That's great. That's really incredible insight into sort of the stablecoin space. You guys definitely have the best kind of bird's eye view of all the different trends, whether that's between different US dollar stablecoins, but then also like these different country currencies. Just to kind of shift gears a little bit, I would love to hear a little bit more about what your thoughts, what types of trends you're seeing in DeFi nowadays, whether that's in the stablecoin space or kind of broader. What types of kind of applications are people using these stablecoins for?
Yeah, I think over time, you're sort of gonna like see the blockchain address audience like one level up to what people are right now. Like these are right now, people are still fairly sophisticated. They require a lot of knowledge. They do a lot of digging. At some point in the next like year or two, I think a lot of what's happening on the blockchain gets like wrapped and like obfuscated from the end user, and you're going to see more fintech applications being built on a blockchain backend, is what I like to call it. So you're going to have like a traditional fintech front end. Users will be interacting with it like like you know, like your Robinhoods of the world, your Wealthsimples, and like all your nice new fintech applications, but they're going to be built on top of a blockchain backend. And I think that becomes like super powerful. You're exposing users to the efficiencies of the blockchain, the immutability of the blockchain, but the user experience of traditional fintech application. So I think we're already beginning to see it from the wallet space, but I think the next year or two, you're really gonna like, we'll take the next step up in terms of like user experience and user interface, so that people just don't realize they're using a blockchain application.
That's awesome. Great insight. I don't want to keep you too long. I know you're super busy. You got 2 companies to run. But I guess one last question is, what types of sort of investors or stablecoin buyers are you seeing? Is it mostly crypto native people, or are we starting to branch out into sort of more mainstream audiences? I assume on the DFX side, it's more sort of sophisticated crypto native people, but I'm just curious on the PayTrie side, if you're seeing sort of an uptick in mainstream.
Yeah, so generally it is still very crypto native, but we're seeing different use cases. One that I particularly resonate with is that DeFi companies in Canada are starting to recognize that they can pay their employees with stablecoins. And this could be either USDC or CAD-C, in particular the Canadian employees in Canada. So what happens is that instead of, you know, having like some of these DeFi companies don't even have a bank account, for example. So what they do is that, you know, they pay their employees in crypto, and then a lot of the employees end up actually off-ramping stablecoins, almost like, you know, like direct deposit or payroll, whatever it is, using PayTrie. And this can be very powerful. We're working with a couple of DeFi companies right now where they actually pay their employees with CAD-C. And then the employees can choose to use the CAD-C, they can swap it on DFX, they can, and then like into whatever token they want, or they can just off-ramp it via PayTrie and send it to the bank account. And all this happens like literally within minutes. So it's minimally disruptive for the employee and provides a very efficient way for companies to handle payroll.
Yeah, that's incredible. I mean, we're a DeFi company, and I guess we're sort of a boomer DeFi company because we have a bank account. But I think
you're one of the lucky few, because
yeah.
it's actually very hard for these DeFi companies to get access to a bank account.
Yeah, no, that makes total sense. And I mean, that's definitely something we should check out as well. Okay, well, I'm going to let you go. But for anyone who's tuning in, I highly recommend you check out PayTrie.com. It is by far the easiest way to go from Canadian dollars into crypto. It's what I use for most of my sort of fiat onboarding. And then if you sort of have more experience with DeFi, definitely check out DFX. You essentially can earn 60 to up to 120% returns just by lending essentially stable coins, which obviously have a lot less price risk and market risk than traditional sort of cryptos. Obviously, none of this is financial advice, but definitely check out PayTrie and then also DFX. Thanks, Kevin, for hopping on the show. This was great. Got an amazing insight into the stablecoin and DeFi space. That wraps up this week's DeFi Decoded, and looking forward to next week.
Thanks for having me, Andrew.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.